Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, and this is for March 23rd, Wednesday tomorrow, 2022. So what happened in the market is it was a bear trap day. Yesterday was bull trap day, and today is bear trap. And market moved up and then moved down, and then suddenly it reversed in the afternoon and then made big move, right? So right now it's at a crucial resistance zone. So what happens, what are the probabilities for tomorrow? Let's see. So the pre-market analysis for March 23rd would be based on all the parameters that is here on the left side, with additional data analysis that we would do, and we'll wrap up some actionables as well. Price patterns, look at the charts, and we have a bullish green wide range candle that is a weak size, which indicates bounce up, and same, it's almost like like a hammer. Looks like not exactly a hammer because the big size is small comparatively, but it's a clear bounce up that you can see. Both did not close above the previous candles, engulfing candles high, so that is showing that there is selling pressure up this 3 candle zone, which is 17350 zone. 17350 has got big resistance, and it was a clean bounce up, so trapping the bulls. That's what happened. So exactly what the action was: nearly 200 points of gain in Nifty, 1.16%, and wide range bullish candles formed into the bear trap, and it closed above the reclaimed the 50 DMA, and the Windows gap support worked well for the Nifty, and 200 DMA also is reclaimed, right? So that is exactly where the 200 DMA and the gap support is, where exactly it mounts for the Nifty, trapping the bears. And the price action continued to be an attempt to break out from the trend line zones, right? So and also in higher time frame we have a double top bearish M pattern also there. BANKNIFTY meanwhile recovered 330 points, that's nearly 1%, and then it formed a bullish candle. There is also a big bear trap, and BANKNIFTY gave up the gap, right? Breached the gap support that was there, but it found the support at the 20 DMA and then bounced up, right? The BANKNIFTY difference is that there is a window gap resistance on the top side, which has to be cleared, and that also did not manage to close above the previous candles high. So there is a bearish downtrend that is happening, and the attempt is to break out from that. So it's still not confirmed, and double top can be seen in the M pattern, can be seen on the high time frame also. The intraday price action, if you see, it was actually a downtrend, trapping all the bears half of the day. The rest half of the day, it's a 2 to 3% of down bounce up that happened from 200 EMA and 20 EMA respectively for the Nifty and the 90. Right, so intraday action, this is what happened, right? This is the big downfall that happened, right? Nearly 0.75% or something, less than 1%, and then the big move, right? There's the 2% move, and here's the 3% move that happened in the BANKNIFTY. Same pattern, fall, trapped all the bears, right? Slipped down from the previous day's low and then bounced up. That's intraday price action. Bought in demands, if you see, same. The volatility is high because of the bandwidth of both indices, and close above the moving average shows buys on the bullish side for both, and the contraction of the lower bands and the upper band also indicates that there is a highly volatile consolidation that can be expected from the volatile bands as per what it shows. Now resistance support zones, resistance immediately on the Nifty can be seen at 7350, 7450. That is crucial resistance because it is attempted 3 times and it's a previous resistance also. So clearing the 17400 is very crucial. Then comes this 500, 7600 Fibonacci 23 retracement also, which is also a kind of 61 retracement if you look at the downside Fibonacci retracement if you draw only for the last swing, from the last swing high, right? So that is 61. So Fibonacci 61 is crucial for any real change of a trend. So any close above 7500 would be very positive. But right now it is struggling at 17,400 below, right, which seems to be a major resistance. Supports down is 7,200, 7,300, then 17,000 is good support. Below that 16,800, 16,900, which is Fibonacci 38. And so that's how the resistance support for the Nifty. Bank Nifty similarly, you can clearly see that it's breached the gap support. The gap is no longer there. Once it is filled, gap is gone. So there is no support or resistance, nothing here. Gap is filled, and then the bounce happened from the 20 moving average from this. Here it happened on the 200-day moving average on the Nifty. Here 20 moving average. So immediate support would be is 35,900 zones, 600 to 900 zones. Below that you have 35,000 zones, which is Fibonacci 50 retracement. Then you have 35,750 and 34,750, and then 34,000 levels. There is a gap support also just above the 3,400 above, right? Here's the gap support. That's a gap support. Now for the Bank Nifty, the main thing is there is resistance on the 35,700 zone, right? And then so 37,500 is a crucial resistance zone. It is also the end of the gap, so that gap could be a major resistance on the upside. And below that you have also another resistance that has to take out, which is at 36,300 to 36,800 Fibonacci retracement level. Also that is red, so that is how the resistance supports. Then 38,000 above that is also a resistance, above 37,500, and 37,000 also has got major resistance, which is within the gap. So this entire zone, the resistance starts from where currently previous days highs, that is near to the 37,000 zone, right? 36,800 zone, right? That's the previous day's high. That's crucial. Once that is clear, then it is a gap. That is a major thing that has been clear, which is 37,500 zones. Downside we already seen. So that's a support resistance on the Nifty and the Bank Nifty. Momentum remains sideways and rising up on the short term. Bank Nifty also remains sideways and rising up on the short term. Medium term, it is also sideways and it is bouncing up from the 40 support, which is kind of bullish. So momentum overall is sideways in both indices. Trend indicators remain in the bullish zone, so for DMI positive for short term on both indices. And the Bank Nifty is on the about to cross over, right? And both having very feeble strength in the in the bullishness, while bearishness continues to be there with the rising strength on the medium term on both indices, right? So that's about the trend on the EX, and volatility cooled up a little bit, 2%, and it is at 34 now. IB is 26, and blind volatility percentile is 95.5 at the peak, and so 25 is also highly volatile, right? So that's about India VIX. So India VIX is still at a high level. Anything above is at a higher level. Remember that it had touched the 30 levels when the war broke out. Now the fear has slightly reduced, but still the fear remains there. That's why it is not ready to give up this range of 25 to 30. No, it is hovering in that. Once that fear has settled down, it will come to the next range of 25 to 20, that zone. And then if it is still reduced, then it comes to the, so it is an index of the fear and the greed that is there in the market right now. Definitely because of the uncertainties that prevails in the market, there is fear, right? So it's a sentimental analysis. It is a sentiment indicator. So there is uncertainty in the market. It as long as it prevails, it will keep on going up and down depending on what amount of good and bad news comes in. Right? It will be very volatile, right? Because uncertainty, people don't know whether to come out of it or get in. So that's why market behaves like this. So once things cool off, then naturally VIX will come down. Operant analysis is showing there is unwinding in the call positions, resistance unwinding can be seen on the Nifty and expiry 2 days before. Tomorrow is Wednesday, 1 day before the expiry. You can see unwinding on the call side positions on both indices. Still look at the range 16,300 to 18,000. Such a wide range. People expect market to move very volatile. Anything can happen is what. That's why the people have written. The option riders basically have written. This is operant analysis on the options. They have written highest put writing in 16,300, which is supports, and 18,000, which is the highest call writing area. 70,000 and 70,800 also is having the second level of highest put and highest call. The Nifty 0.76 put call ratio is not bullish enough. Long builders in the futures of interest is what happened. BANKNIFTY 36,000 and 37,000. So the range is comparatively less. There may be strategies that may be written by the option writers there. So that's why the highest put and the call writing is seen. So again, this 35,000 and 38,000, that range is wide, and that's where the highest put and the second highest put and call writing is support and resistance is seen as per the option set. And 0.81 is closer to bullishness but not bullish enough. And options and futures open that build up by showing that it is a long build up. So overall, some bullishness can be seen, but it's not enough. That's what open interest is showing 2 days before the expiry. So we have a green day. At the end of the day, lines moved really well, and that's other major sectors except in this unilever, all of them. All the major sectors seems to have moved up, and all the major stocks in the Nifty 50 seems to have moved up. And sector-wise, if you see, major sectors did well: IT, energy, and financial services, automobile, metals, everything did. But FMCG and pharma had some hiccups. Viewers analysis, if you see a close another bullish day for Nifty, it is still not more in the bullish zone as per the momentum is concerned. Good volumes, good bounce up is continuing, but remember that there is a major resistance zone that is coming above. So there is bounce up that is continuing, but not at there. Another kind of green day on the HDFC also. It is currently in the resistance zone and trying to overcome that. Momentum is still in the sideways but rising up. Reliance is a star. It has done really well. Good volume, good trend. Momentum is in the bullish zones, trend is in the bullish zones, and price action is breaking out of a major it's a cup and handle part, and it's a channel, and it seems to be clearly breaking out. Info also green, close, bullish momentum, and it's near an all-time high, so you have to be cautious. After the all-time high, it makes sense to take the position. Tata Consultancy is also bouncing up and well within the channel with the trend sideways only, not at bullish, and slow moving. Right. ICICI Bank hit the resistance but a green close after hitting and slowing down yesterday. Today it is showing a green close but sideways momentum, and trend crossover is about to happen. So the major resistance above has to be clear for ICICI to be bullish again. Kodak Bank also green close. The bounce up is trying to continue. Momentum is sideways, but right. So overall, the performer is Reliance for sure. The bounce up, good bounce up is seen in the HDFC Bank as well. Sectoral performance, if you see the ID close 2% up, short term momentum is sideways. So green close for IT, metal green close nearly 1%, auto also green close 1.2%, pharma flat close 0.3 down, and FMCG 0.7 down, reality 1% down. So pharma, FMCG, reality down, auto, metal, IT close green, and bullishness is mainly seen in the metal and pharma, right? Pharma medium term still sideways, so take cautious bet, tight stop loss bets. Metal can this bullish on both the weekly and so bets can be taken, long can be taken, but with the cautiousness because the market is very volatile, right? So that's the sector analysis. Only one sector is seen bullish as of now. Others are all catching up with sideways momentum, right? Oh, look at the institutional participation today, 22nd March, 384. Small amount of buying has happened from the Fyers. At least 3 days of buying happened in this month. Is only thing that we can talk positive on the institutional participation of Fyers. Those institutions today sold, right? So they are since the 17 March also they are selling. Today once again same amount they were selling, but if they had not sold and if they had participated, then market would have really moved up and taken out that major resistance zone, but that did not happen. But times that Fyers did not, at least they paused the selling. Dollar USD INR seems to have lost the momentum. Some intervention may be happening, but it slipped back to the 76 zone and back to the channel. So the moment it is rising above the 76, there is some intervention that is happening, and it is but even the USD INR also is showing some consolidation or some bearishness. You can see point was slipped in the sideways, so it is consolidating, taking its time before it breaks out the next 99 kind of levels, right? Global indices, we Dow Jones seen red, but kind of consolidation is happening after the big bounce up that happened. Order is still sideways, not yet gone to the bullishness. Right? It is finding resistance near the bull zones, you can see. And Nasdaq also same similar pattern. Right? The momentum was just pulled back slightly. Right? It's in the sideways zone. The bounce up well and has closed above the major support zone. It's climbed above that. But some rust after a big bounce up is what you can see in the S&P 500 as well. Right? The support zone is recovered, reclaimed, and from there the bounce up has happened neatly. So basically, Nasdaq and Dow has reclaimed the support and bounced up and moved further up, while S&P 500 bounced up from the major support. So overall, US markets are doing okay. Crude oil is once again rising up and 110 plus. It's once again seems to be going back to 120 zone of 13-year high. So which is worrisome. Momentum is getting climbing into the bullish zones, but still it remains at the edge of the sideways. Gold is consolidating after a failed attempt to break out, and it is not ready to get into the channel once again. Probably it is taking some time to remain there before it starts to break out to claim the all-time high once again. Probably, you never know. But momentum is sideways back, back from the big breakout momentum of bullishness that was there previous weeks. That's our. It's a failed attempt to break out to the that you can see in the gold. Actions to Delta Corp seems to be having very good volume, very good momentum breakout, and a channel rectangle pattern breakout may be possible, but please have tight stop losses at the alert candle, and the entry has been done only after the previous high is taken out, and price starts moving above that with tight stop loss at the neckline of the rectangle pattern, right? So it can give some good upswings from this stock. Delta Corp. Gujarat Dharmada value is another stock which is showing great bullishness, but the thing is it has substantially moved up from the breakout zone. So you have to be cautious, very cautious. Wait patiently for a pullback. So do not enter if at this price. Wait for the pullback and wait for the candlestick patterns to settle or try to consolidate. If the pullback is a big down move consecutively for 2-3 days, stay away. But the pullback after it is coming down, it will settle at some places. You can see that the price is not ready to further move drastically down. So that means that's the time. So you can draw a retracement level from this zone to that zone, from top, from this neckline to the top, and then the retracement levels you can see. So whenever it is near the retracement levels, major retracement level, and see consolidation there, you can enter the stock. Not at this point because it has substantially broken out. It needs some time to cool off. But look at the volumes, look at the momentum, look at the trend. All are in favor of bullishness. So you just can't stop picking up the stock. But you need to wait for that pullback for swing trades in the Gujarat Dharmada. Same with the Delta Corp. So entries only after you have the previous all-time high taken out. 320 near levels is taken out. The price moves above that and tight stops below the alert candle. So the wrap up is that it's a mild bullishness and neutral sideways is what my view is. Right? It's based on the chart patterns, support resistance levels, momentum indicators, the trend indicator, crossovers, Bollinger Bands, contraction, all of this what we have analyzed in the previous. So I conclude from all of that that probably there is a possibility that it remains some kind of consolidation move or a mild bullish move can happen is what I look forward. So market has shown very good recovery of 10% in 10 days. So that's very good, and it has to take some rest before it takes what the major resistance on the upside, right? So, but closing above the 200 EMA, right, and good supports downside is all positive. But there is major resistance on the rest taken out. So FIs are not buying big, Yesterday they sold 3,000 crores. Today about little, very less. So you don't see the Fyers selling really coming back. So until then you have the proper. And pricing crude and dollar is also concerned. So the green close about 17,500 and 37,500. The BANKNIFTY. That is when you can say, and both are above the 200 EMA. That's when you can say that probably this is now getting a bullish launch. Until then it may be mixture of all that. One day it is bullish, 2 days it is bullish, then again back to bearish, then sideways. So you never know what the trend is until that major hurdle is taken out. So war talks and peace talks and war news, that's all floating around. So uncertainty is there in the market. That's why you still have 25. This is not 26. This is 24. So 24 is also high volatility because of the uncertainty that is there. Right? If I continue to sell today, although the DAs are selling instead of that, so hardly any buying has happened today. So there is also not institutional participation is required for the market to really move up. Positive factor is that after the 10%, big dip, major correction of 15%. Now the recovery of 10% has happened, which is the strength in the market that is seen. And but the uncertainty due to various factors are there still in the market. So that's why the VIX is not called off, and then any amount of technical analysis will fail if there is a big bad news that comes overnight. So stay away until the VIX cools up to 20, and hedge your positions, valuation option strategies or gold or some other way. Buy invest in quality stocks when the market is giving many of the stocks at a very good price, but do it in a SIP mode, not at one shot. Right? Always use vertical spreads and counter spreads or hedged, and keep the hedged risk-defined strategies, non-directional strategy or whatever. If in case you are carrying an overnight position, if in intraday, then it is very difficult because of volatility. So keep the position size less, range higher range, between the strikes that you are trying to sell. So that is the approach that you have to do for the options trading if you don't have to do it. Okay. So I'm neutral to mild bullish view is what I have on the markets tomorrow. So if that helps you to frame your view for the market tomorrow and your trade plan in some way, then consider hitting the like button, share to your friends, and we need your subscriptions. We have very few subscriptions, so appreciate your help in this regard. It will keep us motivated. Thanks a lot for watching. Happy trading, happy learning. Bye.